Hello, everyone. Thank you for joining me again today in the Dealmaker Series, where I'm interviewing some of the top deal makers here in DFW. My name is James Sackey. I'm joined today by Greg Hext. He is the founder and CEO of Hext Financial Group. Greg, thank you for joining me today. Why don't you give us a little bit of an introduction?
Yeah, thank you for having me. I'm Greg Hext, as you mentioned, CEO of the Hext Financial Group. We are an interesting firm here in this region of the U.S. in that we actually have investment banking firm, a CPA firm, and wealth management all under one house. Our clients are all business owners. We don't represent anybody that isn't like a first, second, third generation business owner, private equity, or family office. So it's kind of a unique one-stop shop for the business owner with their financing, M&A, tax, financial reporting, structuring, advisory type needs.
I love it. I love it. This is very exciting. You've got quite a broad base of business, so I think there's a lot of insight here for sure. So let's get right into it, I think. So how would you describe the current state of A here in DFW or in the state?
I think it's picked up a lot. When Silicon Valley basically crashed a year and a half or so ago, the market just basically tanked. At the same time, interest rates went up. We've now seen back in September when interest rates did tick down, and then with the new administration coming in, there's just like a renewed energy in the business market in total. Dallas and Texas have been the hotspot for the last few years. We consistently have phone calls from private groups around the United States going, I want to own stuff in Texas. And so the imp business is very active here right now. In fact, I would tell you it's almost like drinking out of a fire hose. We're literally probably talking to one new opportunity a day with some type of transactional type activity, whether it's somebody looking for growth capital, somebody trying to sell. We're seeing a lot of baby boomers that are aging, that are showing up on our doorstep, that are going, okay, this is probably my last window to get out, because I'm seeing a few years here of an uptick in the market, and then I'm probably going to see one go back down. And I don't know that I'll live long enough to live through the next downturn. In fact, I had one the other day. The guy was really funny. He started the call off and he said, okay, just to tell you, he said, we do pipe coating in East Texas. I was referred to you. He said, we need to sell. He said, I'm the last man standing. All my partners are dead. He said, I'm now dealing with grandchildren. He said, it's time to sell. And we started laughing. And so I suspect he's off. We sent him a proposal and he's off doing that. But I have clients who have cancer, I have clients who go, you know what, it's just time. I have people who are tired of trying to do it themselves, or maybe they've grown it to a certain point and then they want to go do something else with it. But with interest rates coming down, it allowed valuations to go up. Okay, which is the other part of that, because a lot of deals got pulled off the market after Silicon Valley, and even in 23, things got pulled off, and in 24 a little bit because valuations just weren't there. But now they're up, a lot of activity going on. And the other thing is Texas is a very business-friendly state. I mean, taxes are low, cost of living is very reasonable here. You know, housing is expensive, but not as much as it is on either coast. And so there's a lot of that kind of activity and just a lot of people moving here.
Yeah, yeah. You touched on one of the next questions I had, and that was kind of around interest rates, and I'm curious to get your take on the current climate of interest rates and with the impact of tariffs at the time of this recording. That's pretty much front and center for a lot of folks. Are you seeing that kind of creep into your conversations with folks?
It is a little bit. Interest rates being down, I don't see them dropping a whole lot. I mean, the Fed even, and the chairman was testifying the day before the Senate and going, they're not looking to go down on them, but it's gone down enough that it's made it a little more reasonable. And I think the economy has ticked up enough also economically that probably where they are right now is probably where they ought to stay for a little bit. From a tariff viewpoint, what we have been referring to as onshoring for a while between the people moving from manufacturing in China and Vietnam and other places going into Mexico and going back there and doing business and stuff. I think that the tariffs between Mexico and the US will get worked out. To give you an idea of the volume of activity, Laredo, Texas is the largest inland port in the United States now. And to give you an idea, on a daily basis, between 16 and 20 rigs a day cross the border there with product moving back and forth. And what people have determined, and probably even with some tariffs and different things going on, the cost of labor down there is so much less, and they can get things done. They know sooner or later to get it on a truck and get it into the US. It's not an issue where it's going to be sitting in a port somewhere tied up because somebody can't. It takes months to get it in terms of lead time. So there are a lot of benefits still in Mexico. I think we'll get the issues worked out just as we have in other places with Mexico, Canada, some of these things. Be interesting to see what happens with aluminum and that kind of stuff. But so far, every time Trump has put down some and thrown down the gauntlet, each time everybody has blinked and been willing to negotiate with him and do something. And I think it's just a matter of helping people understand what the new game is. And there's a new sheriff in town and that things are going to change. But we're not seeing rates doing a big deal. And so far, tariffs are not doing a big deal. The biggest thing is, is probably, the idea of how do you get your business financed? What do you do? And how do you fund the growth?
Yeah, and that leads right into my next question was how does private credit stack up against private equity? What are you seeing there? I know there's a lot of dry powder on the sidelines, some equity from what I've heard, and I'm just kind of curious what you're seeing out there.
There are truly trillions of dollars of cash sitting on the sidelines in the private equity firms. And you got to remember, private equity and private credit are two different types of business. So what you're seeing now is a lot of private equity firms that are sitting on capital and they need to get some kind of return. So what they've done is we call it, they've created a sidebar fund and that runs alongside their PE fund. And they're able to go out and do lending deals to put some capital to work. They may not get the same kind of yield that they would get in the PE side with doing transactions, but at least they're getting some yield on the dollars. Private credit has taken over the credit space. Banks are becoming irrelevant in the lending world. And then right, they may have already lost their market share. We saw this probably 6-9 months ago. And when I speak to bankers now, I tell them all, I said, just if you haven't understood, in our world, you are depository institutions. You're no longer lending institutions. You don't lend money. And the regulators have caused that problem for them. Private credit will ultimately be regulated more, but even the big boys like Blackstone, KKR, these people are all doing private credit funds now and coming downstream, even into smaller deals where they'll do, $50 million deals. They'll do $40 million deals. Used to be that would never have happened. But now there are a lot of different opportunities, and especially for companies that have been through maybe like in the oil and gas area where there's been less drilling, there's been a lot of pressure from the government, and things have not gone well for companies in the last few years. Now they're finding that they have the potential to grow and really do some stuff, but their numbers aren't very good. They've probably even had some losses. So they need to find somebody that's outside the typical lending situation with a typical commercial lender that will loan them money. And there's plenty of that out there. We're not having any problem finding distress deals, all kinds of stuff like that. And concrete seems to have been a big deal recently. I don't know whether there's pressure with new building and all the resurgence in the real estate market, but we've had 4 or 5 different concrete deals. And one of them went back to one of their big banks here in Dallas, and they said, we can only lend you 10 million or 12 million. They need a $25 million line. They have plenty of assets, they have plenty of capital, they have profitability, and so we will go find them a private credit lender that's willing to do that deal.
Yeah. Yeah, you touched on a couple points. I think you might have mentioned BlackRock or Blackstone. I know BlackRock recently acquired HPS, and that was a whole thing. And to your point, private credit is on the rise. I've definitely picked that up from a lot of folks that I've spoken with, and I think I actually happen to see it as of today from Bloomberg that BlackRock is looking to build out some solutions for GPs. So it's interesting how the business is shifting around the transaction business, I mean. And I'm kind of curious on one of your other points where you're suggesting that the banks are becoming irrelevant. Do you think where do you think that comes from? Do you think it has to come, or do you think it's coming from their being too stringent and not being too gun shy, not wanting to lend, or something else? What do you think?
I think there's a couple of things at play there. One is I think a lot of them had commercial real estate issues in their portfolio. And because of that, the regulators have told them, you need to slow down. You need to take care of what you got. And you need to figure out what you're doing with your commercial real estate, your CRE, and some of those kinds of things. And you need to make sure that you're ready to help those customers deal with that, because we don't want a ton of foreclosures and stuff going on. We want to figure out how do we kick that can down the road. I think the other part is the regulators are really putting pressure on them in terms of how far they can go with different customers, what percentage loan to value, what they can lend, what kind of ratios they have to have in terms of cash flow and all those things. And it's just so much more conservative. they work for the company that's in really good financial condition and has got 2 or 3 years of really good positive earnings and great cash flow. But even then, there's a limitation. So you have to look at how you build the cap stack. And maybe the senior lender fits in there. For instance, we had one of the senior lenders from Dallas a few months ago came to us and said, look, we're going to hand you an $80 million signed commitment letter from us to this software company. They want to acquire another company, and we think it's a good deal, but we can only do 80 million. We're going to hand them to you. The transaction's about 150, so you need to go help them find the other 70 million in a different format. We'll do an intercreditor agreement. We'll work with somebody else, figure it out. But you need to help them build a cap stack to allow us to do our part of the deal. But they need more help than what we can do for them.
Yeah, yeah, it's interesting stuff. I know alternative financing is on the rise as well. Let me shift a little bit here back to kind of our locale. What makes DFW unique as a market, or Texas against others?
I think Dallas specifically and DFW is becoming the second finance market in the United States. When you look at people like, let's start at the banks, JP Morgan actually has more employees in Dallas now than they do in New York. And that's DFW, not Dallas, DFW. You've got Goldman Sachs building a new building downtown, bringing in 5,000 people. You've got all these different changes and additions going on in terms of the finance world. And, for a long time, private equity's been growing here. You've had TPG, you've had all these different people that have been here. The piece that we're probably missing that we need to grow is venture. We don't have the VC market that the West Coast has. And for some reason, Dallas has not been able to get traction there and get it going. I think it may be that we're still pretty old school, but the other part is we're so diverse in our economy now, from manufacturing, logistics, software, telecom, banking, insurance. I mean, you name it, and there's one of them here. All the new chip manufacturers that are going up in Sherman area, and thousands of homes and people being hired. All those things make it a very interesting place for people to come. The other part is for Central Time Zone. We got a great airport. You can get anywhere in the globe, and we have international clients all over. I can be in China or Tokyo tomorrow, direct out of DFW. And, that kind of stuff makes it easy for us to do business also on either coast and do business literally, 16 hours out of the day. Also, we don't have a state income tax. I mean, we've got some really positive things like that. We have a franchise tax, on the corporate side, but from an individual side, property taxes, I know the legislature is dealing with some of that, but I think Texas overall is still a really positive place to be with a lot of growth going on. And we'll have to continue to adjust and see that happens. I think we're struggling some with I'm going to call it the private logistics of getting around in your car and be able to get places and things like that. But even building new airports up in McKinney and doing things like that, you see that the whole metro area is continuing to think about how we grow. They're building an F terminal at DFW. We're continuing to see this multiplier going on. Like I say, I keep hearing from people, and that's the other thing. Private equity groups and folks are constantly, I have 2 different meetings with groups coming into town this week to visit and meet. And so there's just a lot of interest in being here because of the continual growth curve that we're seeing.
Yeah, no, for sure. I can definitely echo that. It's, I'm not originally from Dallas or Texas, but man, I've been here for 20 plus years, and the growth has been incredible. I mean, we literally have everything. So it's a really, really tough place to beat for sure. So I'm actually happy to hear
We
that.
have great arts. We have great teams. We don't quit trading away our really good basketball players. But you think about it, we have one of every sports team. We've got a growing soccer deal. We've got cricket here now. We've become much more of an international community too. I talked to a company the other day coming in from overseas who's going to be building Indian and Pakistani Paki restaurants up in Plano, Frisco, with all the different people up there. So we're becoming much more of an urban type idea of all the different things that we have with all the different cultures.
For sure, for sure. It's going to be very interesting and exciting to see it unfold. Greg, I thank you for your time. Your insights are fabulous. I thoroughly enjoyed this. I hope you guys watching will also find it very, very useful. I know I have. If you'd like to find out more information about what I do for work or the Dealmaker series, just check out my website, jamessackey.marketing, or my YouTube. Greg, thank you so much again for being here. I appreciate you.
You're welcome. Have a good day.
Thank you, guys.